All right, let's go ahead and get going then. Once again, this is John LaMaster here at IAMS. I'm a life sales director. We have Paul Huber and Krista Johnson joining us from Allianz. I'm going to go over a few intro slides here to talk about IAMS value proposition for anybody that's new and a refresher for any of our agents out there that are familiar or currently working with IAMS. So first, I want to talk about our new producer builder that we have here at IAMS. We have multiple different levels. So this applies to your first 180 days. When starting out at IAMS, we have, I guess, different prizes or value that you can have access to here. We have a $100,000 level, $250,000 level, $500,000 level, all the way up to $1 million level. So there at the $100,000 level, you can take a cash prize of $750 or an iPad. Moving down to the $500,000 level, you have a Ritz-Carlton stay that we will pay for if you do hit that production level in your first 180 days. So if you have any questions on that, reach out to myself or any of our other sales directors if you are getting started up with us to see where you're at production-wise and qualification. Next, we have our business builder. So we want to thank anybody that does refer an agent or producer or team to IAMS. So you'll get a one-time $50 bonus when you refer an agent. And then you'll also get payouts once those agents start writing business. Now, they don't have to be part of a downline for, say, this is just a thank you for referring those producers, so you can see the different percentages that we will cut a check out to you. I know that there's thousands of dollars worth of checks cut out every quarterly out to producers, once again saying thank you for those referrals and on the production of those referrals. We also have our marketing reimbursement program. So we'll pay $100 in marketing reimbursement per $100,000 of FIA business, $200 per $100,000 of single premium life, and $200 per $10,000 of life target. If you have any questions, once again, on your marketing reimbursement balance, reach out to your sales director or anybody here at IAMS and we can get you those figures. Next, one of our core values here at IAMS is customer service and helping out our agents. It's when Charles founded this company 30 plus years ago, that was our main reason. We know that everybody here that we work with on the agent side is a volunteer. You guys have multiple options, different IMOs that you can work with. If you choose us, we want to provide you value. And we know it's hard. Heck, you're the rainmaker, the CFO, the CMO. Sometimes you feel like you're the janitor of your business. So we want to help you guys out in any way that we can with back office support. So if that's case design, life and annuity quotes, paperless contracting, pushing your apps through from submission to commission, we are here to help. Also, when you're contracted with us, you have access to our IAMS website there at IAMSinc.com. If you haven't checked out the website yet, I encourage you to. There's a ton of information on there. On the life side, there's term and GUL quoter tools, forms at your fingertips. On the annuity side, there's annuity grids, current annuity news, different industry links. Then we also have our marketing corner and sales tips in there that you could spend a whole day on going through information there. A part of our back office support is, as we know, is electronic applications. The industry is moving that way. So on the annuity side, you'll use Firelight. Life insurance side, we'll use iPipeline, and then a mix there on Sunfire for the senior health side of things. So if you have any questions on those, reach out to us, 800-255-5055. If you have any questions on e-applications or getting registered with Firelight or iGo. Here's a slide that goes talking about Firelight, the list of annuity carriers. Majority of them are on Firelight, and I know that there are a few that are moving strictly to e-app. Then there's a few there on the life side. So once again, if you have any questions, reach out to your marketer and they can go over Firelight with you. One thing here that I love talking about is our creative team. Jacob and his group do an awesome job. If it's print material, website design, graphic design, whatnot, they do an awesome job there. So we have a number of things that we can help you out on. Like I said, they do a great job with websites, stationery, graphic design, whatnot. So reach out to us, reach out to your marketing marketer. If you have any questions there, we can get you in contact with the creative team. Once again, 800-255-5055 is the best way to reach us, and we can get you in connection with the creative team. One of the last things here is our IAMS Wealth Management. Charles Jr. and his team have grown a great team over there the past 6+ years. You know, a lot of our agents were just on the insurance side of things and are looking to grow that managed money or get into that managed money space to be, you know, get the full wallet share from their clients. It's a way to increase your revenue, improve your client relations, and then also strengthen those client relations. As we know, if you're the go-to person for your client in every aspect of the business, the likelihood of them leaving is very minimal. So if you have any questions there, once again, 800-255-5055, and we can get you over to Charles, Duncan, and the team over there at IAMS Wealth Management. Our Life and Annuity Academy. So we actually have one coming up in May that unfortunately qualification has closed for, but we will be hosting another one in the fall, and then we're also going to have an IUL Academy sometime here in the summer. It's a great way to spend some time on your business with some great training sales ideas from top producers, large case marketing, business insurance concepts, wealth transfer tools, and going over some sales software tools. So like I said, having one here in May, if you're signed up for that, you're going to get a lot of good information there. And if you're interested in the upcoming Life and Annuity Academies, reach out to your marketer, 800-255-5055, and we'll get you over information for those upcoming Life and Annuity Academies and IUL Academies that we will be hosting. Finally, here we have our Wentworth by the Sea qualification in partnership with Athene. Qualification is ending up here in the end of June, and the trip will be there August 25th through the 28th in New Hampshire. So if you have any questions there on the annuity side of where you are, qualification-wise, reach out to your annuity marketer. They can give you those updates. Also wanted to mention our Top Producer Summit has been announced for 2025. We'll be going to Quebec there in Canada. So wanted to mention we are doing double credits for April. So great time to get in some business now to earn double qualification for next year's trip to Quebec. Finally here, I will wrap up before I pass it off to Paul. Here's our life insurance team. We have Tony, myself, Beth, and Paul. We're all here to help everybody out on the life, long-term care, DI, final expense side of the business. So if you have any case design or quotes that you're needing or would like to talk about marketing and sales strategies, please do not reach out to any of us. We are here to be a resource for you guys to help grow your business. And finally, like us, our Facebook, our LinkedIn, and our YouTube are great resources for webinars that we will be, announcements that will be coming up, new product information that we have coming out, annuity side, rate updates, and whatnot. So that being said, I will pass it off to Paul, and he will talk about some underwriting and what Allianz has to offer on that side of things.
All right, thank you very much, John. Now we'll do the awkward transition here, right, of accepting your share my screen invite, finding the right screen. I think this is the one. So if you want to give me a thumbs up or confirmation, if you can see my navigating. And you got me, Paul Huber. You have Krista Johnson. Krista is one of my colleagues. Both of us work with IAMS to help you guys be the best that you can be, and grow our business here with Allianz. Between the two of us, I think we have well over 40 years at Allianz. That's hopefully not aging us, but our team in general has been with Allianz a long time. We've been involved in the life side a long time. Krista's fantastic. She's been on the life side, but has also been in marketing and sales training and a number of different things. So she comes with a lot of different perspectives for our team. So today I'm going to walk through and talk about our rate lock or our index lock that we have and how it fits in with what you're seeing for your clients for market volatility. And then we'll talk briefly about some of our underwriting programs that are going on, but maybe coming to an end here in the next few months. And then I'll turn it over to Krista to talk about our Ensight tool, which had a refresh. We've had it for a few years. I know we've done a webinar in the past on it, but we'll talk about some of the updates we've made to it and some of the cool new features that you have. And she'll walk you through a quick demo with that. So hopefully, as I get my screen to change here, looks like things are going. You can see in the headlines that whether we're looking over the past couple of decades, that market volatility has definitely been a thing. And I'll mention this a few times, but as we move into the end of 2024, which is an election year, I think there's going to be a whole lot more uncertainty and a lot of questions out there on what's going on. And market volatility is not going away anytime soon. You take a look, you can see over the past 30 plus years, that blue line represents the VIX and market index and the volatility and where it's gone. And you can see that there's nothing flat about volatility. It's been up, it's been down, but that uncertainty is really key. And as we kind of look at our customers, 69% of them have not been able to contribute as much savings as they were going on, and inflation is really taking a toll. We start to look at the questions that they're asking. Will I be able to retire when I want to? Will I have to keep working? Will my family be financially stable? I have two parents, and luckily they've been in retirement for a long time and have been in a good place and haven't had to ask these questions. But depending on when you start that retirement cycle, that is something that's concerning, right? Should I wait till this year? Should I wait till next year? If my 401k takes a 25% dip next year, can I retire like I plan to? Do I have to go be a greeter at Walmart? Do I got to go make 20 bucks an hour at McDonald's working part-time? That sort of thing, right? These are all the questions and concerns that your clients are out there asking. So rate lock is one of those things that will give your clients a little bit of help in locking in values and making sure that when the market is up, they can grab those gains. They don't have to worry about what could happen at the end of the year. It doesn't matter if it's day 3 or day 360, they have the ability to lock in those gains. We'll go through and talk a little bit about how it works, and then we'll talk about some scenarios in which it fits in here briefly. So you're going to be able to track those values online, whether it's your client going out to the website and looking at their values, or you being able to go out and look. You have the ability to run reports, find out. You get reports from us. Our externals around the country are sending you out reports saying, hey, client XYZ has a 6% gain, an 8% gain. Krista and I are sending out reports to our partners like IAMS, letting them know, hey, this client has 5 policies that have index gains over 10%. Great opportunity to reach out and have a conversation. The rate lock currently for the life product is available on both our Bloomberg US Dynamic Balanced Index, or as we refer to it, the BUDB, or our PIMCO ER Index. So there's 2 different options. Good news is, as we're launching a new product later this year, you're going to see a few more options that are not volatility controlled, one being S&P based, one being kind of a blended index. That'll give you additional options to use that rate lock feature. And again, this whole thing is designed to minimize the effects of midterm market volatility. So how does it work? If we start at the beginning of our annual point-to-point segment, typically, we would look and say, all right, today is, we'll look at the date, April 22nd. We're not going to see an index credit until next year, April 22nd, and we don't care what happens in between. It's did we go up from 2024 to 2025? In this example, you can see that through the better part of the year, we have had that consistent return, but it's a matter of, do we want to lock in? Maybe this is sitting at September before that election. Maybe we're at the cusp of COVID or some market downturn when things are changing. We want to grab that gain and not wait that extra month or two until we hit the end. When we lock in your values, and those values get credited at the end of your crediting period or at the end of your policy anniversary date. So there is a chance that things could go up, things could go down, things could change, but you're going to get the credit at the end of the year. So you lock in at a 10% gain. Nothing happens in that period while you're locked until you reach your anniversary. Then we get to your anniversary, you will see that 10% credit happen on that statement. Now, again, we got to remember that things could go up and go down, right? There's a chance that you lock in and the market still goes up and you're going to not experience those gains. Now, in this situation, the policy will start its annual reset at the end of the crediting period, not where you locked in. So we're still using the same 1-year annual point to point. It's just going to lock in at the higher value, and you're going to get that. In this example, let's say it's 10%, it goes up to 12%. You start out at that new value, but you get the 10% credit. It could do the opposite thing also, right? You could go down, which is the best case scenario for you, because not only did you lock in at a higher value had you waited till the end of your period, but in this case, you start your annual reset at a lower spot than where you locked in at. So remember that wherever you lock in, it doesn't matter if it's month 2 or if it's month 11. Things can change and happen, but the credit that you lock in at is what you're going to get. The other thing to point out, that if you are using multiple index strategies, if you have something in the BUDB and something in the PIMCO, those lock independently. So you can lock one index while letting the other one go, because maybe it doesn't have as high a gain as the other one. By locking in, depending on how the policy is set up, most of the time the client can go up to the website and do it. They can call in and they can talk to us over the phone, lock it in, or you as the agent have the ability to lock it in on the website or calling us and locking it in. There are some older policies that the clients, we didn't have on the application that gave the agents permission to do that by phone. We do have a form you can fill out if you do have any old cases out there that give you that lock availability. So let's talk about some different scenarios on how the rate lock has performed, how it could have performed. Again, the rate lock came out in 2019. So in this first example, it was a real thing that clients did use this for. And some of the other ones, it's what could have happened had they had the rate lock in some older situations. So in this situation, we're looking at 2019 and 2020. We're looking at COVID, right? This is the first time things are happening. We got a global pandemic. The world is shutting down. And by the way, we also have an election year going on, right? There was a whole lot of uncertainty going on. And as we look at where the market was, if we had a policy that started in March of 2019, or at least had its segment starting in March of 2019, you can see that we were doing really well coming into February. I think back to that time and remember traveling and getting news that the NBA shut down, and the day after that, the hockey shut down. I jumped on a flight, flew home. The call times at Delta were like 9 hours. We got an email on Friday saying cancel your trips. We got an email Saturday saying don't come into the office, right? So as all this was happening, we went from that peak. You can see here that top date, well, not even the top, was at over 18% for indexes, and it was a big dip to things going down as we went in from February into March. And you can see in March, I specifically remember canceling my trip for which would have been over St. Patrick's Day. So that's March 17th, meaning you were still up in the 12th percentile or percent returns at that point. And as it dropped to the end of the year, we go to 7.76. So people did have the ability to lock in double-digit gains as we were riding the roller coaster down, going into this uncertainty, which turned into years of not knowing with COVID and what's going to happen. So nice opportunity there as you see the writing on the walls and uncertainty happening to lock in, grab a double-digit gain, and not end up. Again, it's not a bad place to end up at 7 3/4 essentially, but to be able to be up 22% or whatever that happens to be and ride the roller coaster down, but get off when we're still at 18% plus is a nice way to go. Scenario 2, we're looking at going back to like 2015. We have market volatility doubling. The S&P and the Dow are really stagnant and just not showing any growth. And what do, right? So again, we're looking here from September of 2015, and you can see it goes up a little bit. It goes down to some negative numbers, which would be a 0 for you on the index side. Fast forward, and as we reach, March, we're hitting 10%. But all of a sudden, what happens? We see some ups, some downs, and the market starts to drop out as we get into the end of June. In this case, the client says, you know what? I think it's going to go lower. I don't want to go below 0. I'm going to take my 6.08 and run, and that's good enough for me. I ran the illustrations, 6 to 7%. So let's take this and get out of here so we don't get any zeros. Well, in this situation, had they waited for the end of the policy year, they would have had an 11+% return, right? The market did rebound and go back up. So in this situation, maybe they made a bad choice from they didn't win, didn't get the highest number, but if this client got the rate that they were looking for, they were able to have a little bit more security. Maybe a client that's in a participating loan and they're at a different point in their policy where they're just looking to beat that 5% assumed or that 5% fixed or 5% loan rate is what they're trying to overcome that hurdle and get the charges and the credit paid for. That's a win for them. We'll look at the third and final scenario here. We're looking at 2011. We got the S&P with downturns. You got the Federal Trade Commission considering antitrust actions against Google. This specifically talks about Portugal and Europe. I think it was the pigs, right? It was Portugal, it was Italy and Greece that were all seeking financial aid or talking about bankruptcy and different problems. A whole lot of uncertainty as we're going through. You can see in 2010, October, going to the end, we had ups, we had downs. In this case, you lock in at 6.7 in April, so that's 6 months into their policy. The market actually goes up after that, so you might be kicking yourself saying, well, I wished I wouldn't have locked in. But in the end result, when we hit October of 2011, you can see the market has dropped back down to a similar level, right? A little 5.55, so it's at a little bit less than where they're at, but still a decent return and not zero. So again, you're going to win some, you're going to lose some, but again, having that client have the ability to say, I want to lock in, I don't want to worry about this. We have a lot of policies that people use premium financing, right? So they're leveraging their money, they're trying to beat the rates, they're trying to beat the charges in the policy. It's what's right for them at that particular time. We have a sales piece that talks about locking in with a 10% strategy. This being that as we look at the numbers over the past from 2004 all the way to 2023, the problem is that if we expect that we are going to get zeros, you can only lock in, you're only locking in on the gains, right? If we're consistently locking in at 6.7 or 7%, you throw a zero in there, your average is going to go down. My Minnesota math tells me that if I have 10 years and 7 out of those 10 years I lock in at 10%, but the other 3 years are zero, I'm going to have an average of 7%, right? So it's important to have a good lock number to not necessarily jump the gun. In this example, looking back over the past 19 years, I think there were 14 instances where the clients could have locked in at a 10% or greater return. Again, key being having the opportunity to get that 10%, giving yourself all those opportunities. So when you hit that 2-year, 2021 to 22, 22 to 23, when we've had those zeros the last couple of years, having the ability to have a higher return to get that average up so that we're reaching some of those estimates that we're putting in the illustration. Again, there's no right time. It's a matter of what's right for the client. Here's the cool thing is not only do we have the ability to manually lock these indexes, meaning going out today, looking at the value, saying, yep, it's at a rate that I want to lock in, you have the ability to set an auto lock. So you can go out to the website or the client can go out to the website and set a target. You can see here of 12%. It doesn't have to be 12, it can be whatever they want it to be. And at any point, if it crosses that 12% or 10% or whatever that number is threshold, the policy will automatically lock for the customer. Again, these can be set up independently. If you have multiple indexes that have the lock ability, you can use each one, set them up on their own number independently. One of the questions we get asked is on the annuity side, there's actually a lower threshold that you can lock. So say we're at 10% today, you could go out and say, you know what, I want to put an 8% lower threshold with a 12% higher threshold. That way you don't ever bottom out below that 8%. Unfortunately, currently we don't have that option available on the life side. It is going to be coming out this summer. So the customers in the future, if you've sold any policies in the past, will be seeing it added to their policies. And then policies in the future, probably July past, will have that lower threshold as well. So again, a nice opportunity to bracket it up and make sure that you're getting returns. I did an event a couple weeks ago, and it was kind of cool. The group I was with did a presidential debate with all the carriers and put us all up on stage and let us kind of take shots at each other, question each other, talk about what was best about our products. And one of the things I heard from our competition, I've heard this a lot, is this rate lock sounds really good, but nobody actually uses the rate lock, which is garbage. As we look back, we've had, again, it's been out there since 2019. This information is from, I believe, February of this year, kind of going back. We've seen an average rate lock of 10.2 with our customers that have used this. On the life side specifically, we've had tens of thousands of clients use this, and frankly, for the last 2 years, they've been limited on the amount they can use it because we haven't had index gains with the volatility and the downward markets that we've had. So we are seeing our customers use it. As a matter of fact, March that we just wrapped up, March of 2024, was the second highest utilization that we've seen of any month over the past 5 years we've had this. We had almost 1,300 clients lock in. The average rate that they were locking in last month was 8.4. Again, clients, I think, are desperate a bit for some gains after coming off 1 or 2 years of not having that opportunity. So this is absolutely a real thing. Our customers are absolutely using it, taking advantage of it. It's not smoke and mirrors. It's something that, because Allianz does its hedging internally, we are the only insurance carrier out there that are able to go out and get this taken care of and add it to our policies. We do have some resources out there. We have plenty of information talking about how the rate lock works. I have a sales piece talking about that 10% scenario. We're more than happy to get it out to John and his team for them to email out to you after this presentation. Shifting gears a little bit, I kind of teased up at front about underwriting. We have been running an underwriting promo going on almost 2 years now, maybe a little less. Upgrading your customers. If the clients are able to get a standard non-tobacco rating, we will automatically upgrade them to our best risk class available, which is preferred plus non-tobacco. Preferred goes to preferred plus, standard goes to preferred plus, standard tobacco goes up to preferred tobacco. There's no cost for this. It's just we do full underwriting. If we're able to get to that underwriting spot, we give them the upgrade. This is a discount that they're going to get for the rest of their life. Somebody standard gets to be preferred plus. Every single year, they're going to be able to have that cheaper insurance, which is a huge deal for the policy. Take advantage of this. We don't have a time when it's going away, but I would imagine at some point this year that it will be disappearing. So take advantage, get your clients in. As long as the apps are in, they'll go through that program. The only caveat we have to this is with our standard non-tobacco rating, we are standard through table 2, meaning we'll take a table 2 and bump them up to standard. That table 2 does not qualify for the upgrade program. So they do have to be able to achieve a true standard non-tobacco rating to get that upgrade. Otherwise, they're already getting their upgrade going from table 2 to standard non-tobacco. We've really revamped our underwriting process over the last couple years. We have kind of the ABCs of how to submit your business and how it works. There's nothing on your end that you really need to do for this. It's simply A is the accelerated underwriting program. This is up to $3 million death benefit, 18 to 60 comes through this path. We go out and we get the motor vehicle report. We get either a telephone interview or an EPHI, which is now available. We do a prescription database check, motor vehicle report, and MIB. I've said one of those twice. We also do kind of a mini credit check, if you will, that we can run with some financial reports. All that gets looked by an underwriter and triage, and if we're able to get a standard non-tobacco rate or better, we make that offer. That offer also can be bumped up to that preferred plus with the underwriting promo that's going on. So that's the best way, right? There's no blood, no urine, no physical measurements in that situation that gets them through that accelerated underwriting program. We have our boosted underwriting program. So if you have a client between $3 million and $5 million of death benefit, we can do that accelerated underwriting part of it. And if we can go out to their doctor and they had a physical recently or some doctor's visits in the last 6 months, we are able to get them through without blood, urine, physical measurements and going through. So with electronic records and a lot of the things that we have now, we're able to go essentially up to almost $5 million for accelerated underwriting in certain situations. And at any point, if that fails or you're above any of those thresholds, we have our classic underwriting. Again, we've made a lot of advancements in that. Faster, quicker, better. I think we've reached industry standard, if not a little bit better, with the talent that we've added and the time, the effort, and the technology we put into both underwriting and new business. So I definitely spent some time a handful of years ago over that COVID period apologizing for where service was and where things were. That is not the case now. We have things rocking and rolling and going through. So we're able to get policies through as quickly as possible. With that, that is my last slide. If you want to hit that QR code at all on your phone and get out to our website, you are able to do so. I will turn it over to Krista. You can see our case design team member there too. If you have questions, you want to set up calls with any of your internal wholesalers, you can call them at the 1-800-950-7372 number, and they can get you set up and taken care of. So with that, John, do I need to stop showing my screen?
Yep, I'll get it over to Chris. I had one question here in the chat, and I think you covered it, but will you send alerts to agents if you see the market will decline?
We do not send alerts when the market will decline, no.
Okay.
The reports we have, you can go out as an agent or as the FMO or as us as the marketers and simply type in somebody's number and say, show me everything above X amount. You can set it to 1%, 10%, 20%, and it will pull all those policies. So we have a default set, I think it's 6% right now. If you guys have clients that are above 6%, we're sending you as agents a note saying, hey, FYI, these are the policies that are above this number. You can go out and look at any point, but to go on the downside is way too confusing. Kind of an interesting thing as we're sitting here today, and I've been doing this for 20 plus years, and we're in this really weird time with this volatility that we're seeing these pockets of gains right now, right? The market is up in general, but it depends on where you're looking at from point A to point B. So March was one of those the market was down last year and it was up a bit, and that gap caused some really good returns. The market kind of had bounced back up into April with those higher numbers, so you didn't have those lows and those highs, and the market dropped a little bit. So the April numbers aren't looking as good. Right now, customers that are in October have some pretty decent returns, and if the market starts to jump up a little bit, look for your October clients to maybe lock those in. Again, we're hitting these really weird pockets of highs, lows, and getting that gap in between.
Perfect. Okay, yep, I will hand it over to Krista now to talk about the updated Ensight tool.
Awesome, thank you so much. And we'll just do one more awkward transition to sharing a screen, so bear with me. Let's see.
Right now we see your Word document.
How about now?
There you go.
All right, so you're seeing this screen. All right, so first of all, thank you so much for having me on to talk about the Ensight marketing story. We at Allianz, we have had an Ensight proposal tool going back to, I believe it's 2020. So it's been just over 4 years that we've had this digital visualization tool, if you will, to bring an illustration to life. And in 2021, we added what's called a marketing story. Now, going back to then, we were the first insurance carrier to bring this tool to our platform and incorporate it into our illustration software. Secondly, we were also the first carrier to introduce what's called a marketing story. The marketing story itself is it's an additional report that you can add to the visualization tool that kind of highlights all the different key features in the product and really brings that illustration to life for the client. All right, so the few things, you saw my Word document, the few things that we're going to talk about today is what is it, how can you access it, and then why would you want to use the tool. All right, so what I'm going to do is I've actually built out an Ensight proposal already, but I'm going to go into it and just show you how to access it. So that's really important. First of all, what you want to do is you want to pull up our illustration software. And I'll take just a moment here to pull this up. And we are going to run just a quick illustration. Now, obviously, this tutorial really isn't about running an illustration, so I'm just going to kind of fly through this. and put in just an, kind of a standard client with us, a 40-year-old who is wanting to max fund a life insurance contract because in the future, during retirement, he is going to want to access the cash value in the form of loans to supplement his retirement. So I'll just run through this real quick. If you ever want help on running illustrations, I'm sure John can help you out with that, or I certainly can as well. So let me just put the inputs in here. We are going to show an annual premium of $25,000, and we're going to pay through right up until retirement, so for 25 years. And then, of course, we want to show that income stream coming out starting in the retirement years. All right, so we know we're just going to keep the default index allocations, which is our Bloomberg US Dynamic Balance 2 ER index. Lovingly, we call that the BUDB. And then also the PIMCO Tactical Balance ER index. These two are index lockable. So what Paul just covered, the client does have the opportunity to lock in these index values anytime throughout the year. So it's a good thing that those are the ones that are actually defaulted. And then I'm just going to go ahead and plug in IAMS, because what I'm going to do after this is I'm going to actually email this over to John, and then John can actually email it out to the rest of you, anybody on this webinar that wants to see an Ensight illustration and kind of play with it either on your computer, on your phone, laptop, whatever it might be. You can use this digital visualization tool. Okay, so what I did, I just want to clarify. Now I ran the illustration, okay? And right now, over on the left-hand side of the illustration software, you can see that there is an Ensight button. This Ensight button over here is a helpful link for accessing Ensight proposals that you've already created. So you don't want to use this Ensight link to be able to see the illustration that you're just running for your client right now. So here's what you'll need to do. Once you've gotten through your illustration, you've put all of your inputs into it, you'll get to the reports tab and you want to create the actual PDF. So you just click print. All right, so it takes just a minute while this is all putting it all together, all 50, 60 pages of the illustration, right? Creates the PDF that normally, this is what you would, send over to your client. And it will come up here in just a second. I just want to show you that. Here you go. So this is the PDF. This is the illustration. Right now, I have 53 pages. I did not select all of the additional reports. So just kind of the main body of the illustration. But what you can do once it's created, you can either minimize it or actually just close it down. Once you closed it down, you're now going to see on the illustration software a link to Ensight. The reason this doesn't show up before you create that PDF is because that is really the way to get into the Ensight proposal tool, which is kind of a cloud-based tool. You actually need to create that PDF first, because what Ensight does is it's kind of a data aggregator. It's pulling all the information that it saw in that illustration into Ensight, which is now going to be a link on the page. And if you access it, it's going to pull up the next page, the actual Ensight proposal. And I'm going to show you now. So once you've gotten this pulled up, and it takes just a minute because, again, it's taking all that data from the actual illustration, putting it into this tool. And then what you can do is you can do a couple different things. I'm going to go ahead and use a template, and this is how you're going to access the marketing story. So I'm just going to go ahead and put marketing story. You got to name the template, and then you choose it. There are many different choices here, and I'm going to show you the other ones, just do a quick little intro into the supplemental income one, which is the most popular. And then, but right now, what's brand new is right up at the top is called this Life Pro Plus Advantage sales story. So I'm going to go ahead and click that, and then click Save and Open so you can see exactly what this is. So I've kind of told you what it is and how to access it. So let me go ahead and just show you exactly what this is. So right now we are on the presentation setup. So this is where what you're going to see right when you log in. And what is it, right? So each page of this, you navigate by going to these different links over here. But let's look at the first page. All right, so the first page itself is really about the policy. So what is the policy? What does it do? What are the tax advantages? Why would a client want to have this cash accumulation life insurance versus any other type of product, like a term product or anything else? It talks about the different risks. So it really just goes into what is it? Why is my agent or advisor telling me that this might be a solution to one of my needs, or to an overall financial need within my portfolio. So really it just goes in and gives a little more detail about that, about the high level product. Second section here is the benefits and features. The benefits and features is really a great place to see, okay, what is that index lock that he told me about? Paul just talked to me about this policy that has the index lock and the ability to lock in gains. What does that mean? So now you've got all of this information, all of the marketing highlights that we have in some of our sales flyers and our brochures are all actually right here that someone can look at electronically, whether it's on their cell phone or on their computer or wherever you might email it to them. So again, just goes through some of the riders as well, loan flexibility, the different index options that are available, just really kind of simplifying the marketing story and highlighting the key features within the product. The next section is the policy summary. Now this is where it really brings the values to life. Okay, so this obviously it has just a quick little snapshot up front. This policy itself was paying $25,000 a year for 25 years. It was a 40-year-old male, if you remember. So the total premium going in is $625,000. 1.6 million is the cash accumulation potential at age 65. That's based on the just the max illustrated rate. So the average illustrated rate that we show on the illustrations. And then it also shows the amount of loans that they're going to be able to draw out of the policy as well. And so I didn't show you the quick view on the illustration, but if I did, it would show you that they were able to take out $144,730 a year for 55 years. That goes all the way to age 120. Okay, it's showing a total income. But so this is just the snapshot. But when you scroll down, this is where it brings the illustration to life, because the client, first of all, you're able to toggle through this. Again, this is your setup. This is you saying, you know what, when do I want to show this? This is actually funding the policy. Well, my client is going to fund it until age 65, so I'm going to leave this little toggle button over at age 65. You can see that the values change as you move those around. So, okay, now we're going to go down to the income tax-free loans. Again, you're showing an income stream starting at age 66, because we paid into till 65. The amount that the loans can come out at is $144,730. So I'm going to go ahead and move this all the way over to age 85, just kind of average life expectancy. You might talk to your clients and, hey, maybe they live, their parents or grandparents have lived to be 90s or older. For this particular box, you can only move it to 85, which I still think gives a really good example of showing the potential loan amount at age 85. These are income tax-free loans, the cumulative amount. And again, remember the premium that they paid in was only $625. So again, these values are things that they can see and play with once they get the illustration sent to them via email. Now, the death benefit. How are they going to leave a legacy to their beneficiaries? Again, you can move this toggle around. This one does go up to age 100. So there you can really see, wow, they've taken out over $5 million of income tax-free loans. And if they died at 100, they still have $950,000 of an income or a tax-free death benefit to their beneficiaries. So this is how the clients are able to see this as well. So again, I'll just kind of leave it at age 85 here, just like the other ones. Internal rate of return. So this is an optional report. Some agents love to show this. Some are like, you know, I'd rather not show this at this point. Maybe the client, you know, may not understand what it is, or they want to have that conversation with the client as well. But you have the ability of adding in the internal rate of return report, and you can actually show, you know, what the cash value and the death benefit, IRR. How is this policy's performance? How can we evaluate the policy's performance throughout, you know, however long they have the policy? Again, you might want to just leave this you know, wherever you want, but I'm just kind of moving everything to age 85. The reason I'm moving these toggles and leaving them there is because wherever you move them to in the presentation setup, that's where it's going to be stuck when you send it to your clients, not meaning stuck, but that's where it's going to be when you send it to your clients. The clients are still going to have the ability of pulling these toggles around and seeing all these different values, which I think is great. The next one is charges. So when you're talking to your clients, you know, they might say, oh my gosh, you know, this sounds like I see these charges. Insurance is really expensive. Life insurance seems to be so expensive. Why wouldn't I just buy term, you know, instead of a cash accumulation life insurance? Well, really what you're looking at is how are you comparing this and the charges to their other investments that they might have? So this is also interactive here. And if you talk to your clients and you say, well, what are the other investment options that you have? How much are you paying your investment advisor? They might say, oh, I'm paying 1%, or maybe I'm paying 1.25%. You can actually change this and, you know, do the comparison. So it takes just a second, but you'll have a comparison there. At age 75, it's saying, well, you know, based on, you know, the living benefits, the cash accumulation that you're drawing down versus with the loans, that really your charges in the life insurance policy at age 75 is 0.12, whereas your typical asset management, as your assets are growing in these other asset products that you might have within your portfolio, you're actually paying higher and higher because your assets are actually growing. So you're paying more to your investment advisor with those. You can actually change the age as well. So if you wanted to say, you know what, I want to change this, you know, what is the comparison at age 65 or 85 or whatever it might be. So you can actually change those as well. I do want to show you that. Oh yeah, go ahead.
I was going to jump in and just stress and overstress. Like, my opinion in dealing with IULs, the most common objective to anybody, whether it's Dave Ramsey and his disciples or anybody, is life insurance is too expensive. This is a fantastic tool. If nothing else, forget everything else. If you come out here and use either this section, or Krista, do you want to click real quick? I'm jumping ahead on you. Just the charges button down below.
Yep.
Yeah,
you know what? Okay, yeah, I'll do it real quick. I was going to show them the actual other illustration. I can't do it right here, Paul, because I've only selected the marketing story, but I do have another example where I will show that.
Perfect. It's a great way to illustrate how the charges work. And yes, they're expensive when we start, but a properly designed and funded life policy is way cheaper than anything else you're going to do. And the other thing, you know, to not interrupt you too many times, Krista, I will just say that when we talked about that 53-page illustration, you were required to give them every single page of that, right? And show them, here's your illustration. If you wanted to walk through, some agents do, and go through every bit and piece, it's a lot to digest. It's a lot of numbers. It's a lot of just overwhelming information. This is something that you can take all that information, customize it to how you want to tell your story. And it isn't, you know, this is all compliant approved. So you can add, take away, like she said, take away the IRR page if that's not something you want to talk about. If you don't want to go through all about Allianz, take that out, whatever. You can add, subtract from this and create this presentation to be what you want, send it to them so they can digest it on their own, like at their own level, their own speed, and come back to you. So again, it's a very powerful tool. It makes things a lot more easy to digest. and I'll shut up and let you go from there, Crystal.
All right, not a problem. Okay, so yeah, we'll get off the charges here and then just go on to the next step. So then what your client sees next is, okay, who is Allianz? You know, how strong of a company is this? Why would I want to purchase a policy with this? And then it's going to have your information on it to get in touch with you, the agent. I just put IAMS in here, but to get in touch with you, their agent, their advisor, to, you know, how can I move forward with this product? Or, you know, if I have other questions, what can I do? Now, I do want to show you that, yes, if you want to add something, you can just click it. When it's blue, it's going to be in the report. If you turn it off, that means it's not going to be in the report. And so let me just show you. So I've got them all right here. This, now you can click on presentation view. This is what your clients are actually going to see when they get this emailed out to them. It's going to have the same different, you know, items that you selected. It's going to have that policy summary page. Again, remember, you set it up so that everything's at the very bottom or back here, but you can, you know, instruct your client via email or phone or however. You can kind of go through this with them and, you know, let them know that they can actually check out the different values all throughout the policy years just by simply moving these toggles back and forth. And they're going to see those values move as well. Easy to do. All right, so I'm going to exit out of this again and go back to this. Now, if you want to send this to your client, which I'm going to actually send this to John right now. So if I were to want to send this, you can just either, you know, right click and copy, or just click copy right here and then send it in an email. So I'm just going to go ahead and save this in an email right now. Give me 1 second and we'll get that over to John so that he can get it out to you. So that's the first thing. So the marketing story, this is brand new. Again, you know, when we launched this back in 2021, we were the first carrier to come out with a marketing story, which is great. But it also, you know, became outdated pretty darn quick, especially when they started introducing this to other carriers, and each carrier kind of made enhancements and changed things. And, you know, they different marketing organizations started building these as well. And they just got a little bit, you know, the look and feel got a little bit better with more options for interactions. And so we wanted to update this as well. So this literally just rolled out earlier this month. So it's brand new. You're seeing it here for the first time. I really invite you to take a look at it, possibly use it for illustrating our particular product. One thing I do want to point out is that on every single page of this, there is a link to view that entire illustration, the actual PDF that, you know, that is being used for this particular visual illustration. You can always pull up the PDF if the client can as well. They can pull up the actual illustration if they ever want to actually look at it and have the entire illustration. All right, so earlier I went ahead and I built a couple into this software, but I did not include the story, which is super easy. So if you go into the software, again, I did it the same way, and I chose that supplemental retirement option that I showed you earlier for a template. This is the illustration that I pulled up. So I have two in here. I did one for the minimum death benefit, and then I went ahead and solved for a second one with a $500,000 death benefit. So just bumped up the death benefit a little bit just to kind of take advantage of what we have, what we call a premium band. We do have a premium band at $500,000. But you can see the minimum one is still working out the best. I believe the death benefit was 400 and some thousand to start out with. So you can look at these in different ways. So what I like to do is I like to actually bring up the single view life insurance. So you can change how these are being illustrated. You can change the way that they're ordered in the policy. But let me just show you this really quickly. So this is great, right? So you can actually show, okay, great. You've paid in $25,000 a year starting at age 40. You get to age 65 and you've paid in your $625,000. But we can go even further on this. And now, you know, after talking with your client, they say, you know what, longevity in my family, you know, it really is around 90. So let's keep it at 90. And then you can look at these values with them. The client has paid in $625,000. They've been able to take out $3.6 million at age 90. And at age 90, if they were to pass away at that point, they still have the death benefit of $1.168 million. So, you know, this is a great way to show the different values of the life insurance policy and really bring it to life. You can change the look of it. I always like to kind of have it look a little bit cleaner, so I take away that coloring and just have the lines here. But again, charges. So he did talk about charges. So this is a way to show your client, guess what? You know, I like looking at this and pulling this over and saying, yep, the first couple years of your contract, yes, that's when the charges are going to be highest. This is a front-loaded product. But as you continue to put cash in the policy builds accumulation value or cash, value within the policy. Your expenses, your total charges actually get lower, which is exactly the opposite of any other type of investment that they might have. So this is a great way of showing how, yes, they are correct when they say it might be expensive up front, but as the policy moves on, as more cash value grows and there's less net amount at risk for the insurance company, the charges actually get lower as a percentage of the overall benefit. So that's this one. I did add that second one in showing a slightly higher death benefit, but again, you can move these around and show your client what these are. If you wanted to have this entire presentation that has all of these different reports on it, you can certainly do that, but you can also still add the sales story. So you can still add in all of those marketing details, the product information that you want to share with your clients. So you can add in the sales story, and you can still change the order and bump that sales story up to the very front to lead with that if you would like. So just showing you how to do that. Just like that, simple as that. Again, maybe you want to take out some of you're already showing charges down here, so maybe you want to take that out. But again, that's really how you use it, what it is, why you might want to use it. Just really bringing a 50 to 60 page illustration into a digital platform that your clients are able to see either on their cell phone or on their computer, and just really bring it to life. Hopefully that helps. John, I'm going to turn it back over to you, see if there's any questions.
I don't think there was any other question. I just want to confirm this second presentation that you were showing was comparing two different illustrations, correct?
Yeah, it was.
Okay.
And yep, that was. It has two different illustrations on it. But even if you just wanted to create one illustration and put it in that supplemental, retirement income template, you can certainly do that too.
Yeah, no, I just want to confirm.
John,
go ahead, Paul.
So the cool thing is you can add up to 4 illustrations, and as you get into all those other sales kind of concepts that were there, you can kind of customize it, right? Like I've done, there's a cost of waiting. So you're talking to a 40-year-old, and you and I were talking about our kids, and life happens and everything that's going on. You go, all right, well, here's what your illustration looks like. I ran you one at 40 and one at 45. And you can see, because you had less years to fund and you're taking money out earlier, the income isn't as good. And now you have a visualization of how that compares and contrasts. Or maybe you run one at $5,000 a year to $10,000 a year, and you can see how the income increases. What do you need? What are your things? All these things are what's available to you. So yeah, you can put up to 4 different illustrations in there, do the compare, do the contrast, see which one's right. And it is a much better visual comparison than to go, well, let me pull this 80-page illustration and compare it to this 80-page illustration. And it's on page 62, whatever. You can toggle back and forth, overlap them. There's a lot of really cool things you can do. It just depends what you're trying to accomplish.
Perfect. Okay.
One last example. Oh, sorry. One last example of where you can use this as well, if you had multiple illustrations, is if you go in and you say, hey, I'm quoting you at Preferred Plus. Well, the insurance company comes back and says, you know what? Nope, they only qualify for standard, or maybe it's a table 2 or table 3 or something like that. So this is a way to put them side by side and still compare the values to the client and make them see that, hey, there is still value, even if I didn't get the risk class that I was originally quoted. So that's another reason why you might want to put multiple illustrations into one of these tools as well.
Perfect. No, this is I know Krista, you and I have went over this software a couple times. Obviously great value. I love the part of showing the the AUM asset charges versus the life insurance charges. I know that's a conversation I have with many agents that they try to overcome with their clients. So being able to have a compliant way of showing that is huge.
Agreed. Thanks again for having us on and letting us go through this, showing you guys this new tool.
Yeah, you bet. I'm going to launch one poll here to the group. Anybody that would like some more information on Allianz's Life Pro Plus product or want to have a discussion about the Ensight tool, I have a poll here if you'd like either myself or your assigned marketer to reach out to go over it, maybe get going with some contracting, start writing some production with Allianz. Obviously, great product. This tool is huge. So yeah, reply to that poll. We'll be in touch with everybody. Thanks again to Paul and Krista for jumping on here with us and everybody that has joined. I think that's all that I have. So appreciate everybody here and hope everybody has a great start to their week and a great Monday.
Thanks, John.
Thanks, everyone. Bye-bye.